admit I'm not an expert on, but I've been trying to get my head around it, is the development of credit derivatives. So here's what happens. Mortgage broker issues a subprime mortgage issued through Bank of America. What happens is, of course, Bank of America doesn't hang on to that debt. They sell it on to an investment bank. And what an investment bank does is it takes a whole bunch of these debts and repackages them into several what we call tranches, AAA, BBB, CCC, and junk. All right? And they package it together and they call it a collateralized debt obligation. And it becomes by itself a financial product. And so they go around to investment funds, mutual funds, Norwegian local governments, Icelandic local governments, and says, we've got this new fantastic product which will give you an incredibly high return on your money. And so, of course, these local governments and these investment funds are like, great, can I have some more of it? And they start buying into this debt. Now, can you understand how much more complex that is compared to the traditional way of lending? Is we've passed on the debt several levels along. And the people who are buying the debt don't really understand the implications of buying the debt because the credit rating agencies, Fitch, Standard & Poor's, they've said they're AAA. All right? So through financial wizardry, we got to that point. Of course, at the same time, something else happens. As the prices of housing are rising, people are building more houses. So, of course, it's natural that as the supply of housing rises, price rises cannot continue. So at the same time as we're issuing more of this collateralized debt, we're also beginning to increase the supply of housing, which is going to naturally bring the prices down. So in some senses, this crash was self-perpetuating. It was bound to occur because we were throwing more debt into the market at the same time as we were increasing the supply of housing. Other things that are going on. The Basel Concordat is changing. The traditional way of regulating banks was regulators regulated the banks. They set the rules and the banks followed. The new approach was we'll let the banks regulate themselves. It's a little bit like giving the keys to the prisoners in the jailhouse. All right? Because as managers in banks, we are under pressure to increase our profits. So we might take risks that we wouldn't necessarily take if we were regulated away from doing so. And this is what's happening right now after the collapse, is this discussion about how should we regulate. Another thing, I'm not an accountant, but another problem we have is that in most standard accounting rules, losses are cash losses. Right? So as a company, you have to measure that directly on the balance sheet as a loss in cash terms. Whereas in fact, you could probably make a guess that, in fact, although it might be losing right now, over the lifetime of that security, it may end up paying off. All right? And last of all, there's a conspiracy theory that, in fact, government statistics were deliberately revised to improve the performance of the US economy. I mean, I don't have enough evidence of a global conspiracy to do that. But what's the impact? Well, first of all, the stock markets have gone back to 1997 levels. So if you had started investing in 1997, you're back to where you started. All right? Investors have seen huge amounts of money lost. And what we've seen, I guess most importantly, is this freeze in the interbank credit markets. These are the markets where banks lend to each other. All right? So, for example, for construction, there are a fraction of the banks now that are lending that were lending a year ago. We're seeing increasing unemployment. We expect that US unemployment will reach 10% by the middle of this year, if not sooner. It's record high. Unemployment in the UK reached 2 million this week. And we've seen some significant bailouts. I don't know whether you read the news yesterday, but the US Treasury announced that they're going to buy $1.2 trillion worth of debt. How does the central bank buy $1.2 trillion of debt? How do they pay for it? Any guesses? They print money. Right? It's a little bit like you with your credit card payment, going into the bank and saying, do you take Akbar dollars? Because I've just printed some off of my HP. You take them. So what we're seeing now is a massive monetary expansion. Yeah? And of course that may have long-term implications for inflation in the US, which is why we've seen in the last couple of days, US dollar has been weakening quite significantly because investors are worried about the inflationary impacts. And of course what we're seeing on a secondary level is a decline in business globally. The world's greatest car company, Toyota, made a loss for the first time in 74 years this year. That gives you an idea of the depth of this crisis. I mean, we expect GM and Ford to make losses because they are permanently failing organizations. But when Toyota starts making that kind of a loss, we know we're in big trouble. So what's going to happen next? I'm going to present you 4 scenarios, which at the moment are my current best guesses. I might get up tomorrow morning and do this and change my mind. But as is often paraphrased, you ask an economist his opinion, you'll get at least 2.5 or 3 back. Right? So what's our best case scenario? The next 6 months are going to be really, really tough. So we can forget about 2009. But by 2010, things are going to get better. And why? Because what's happening in the financial markets are not going to impact the real economy in the long term. All right? So these toxic assets will not bleed into the real economy. All right? What we're going to see is, because there are so many people losing their jobs currently, that this growth in the labor supply and the fall in the price of oil, now I guess, if you're OPEC or Russia, you have to start worrying. But if you're a net consumer of oil, it means inflation is not going to be a problem either. Excess labor supply, cheaper commodities. And these various stimulus packages that we've seen are going to work. So that's the good news. Look forward to 2010. Things are going to be just okay. You can leave now if you want, because it gets worse from here.